Good morning everyone and welcome to Morning Markets from True Potential. For those of you that aren't a subscriber, please do click on the subscribe button and you'll get all the great content from True Potential onto your YouTube channel. Looking at asset markets over the past 24 hours, two themes that I wanted to draw out today, that of company results and the ongoing nature of those, and secondly, some of the important announcements from the Chancellor yesterday as they feed into the UK. So firstly, looking at the postponement of the fiscal statement from the 31st of October to mid-November. And really there's a couple of reasons for that. I think one is that the stability has been brought back to the bond market and to the currency. And that has come back by completely eliminating those policies that the previous Chancellor and Prime Minister had set out. And that has really brought a stark focus back onto really the challenges that the UK economy faces, but more importantly, that the government are enacting policy that is allowing those to be addressed. And to provide some context for that calmness, as how calmness has come back into asset markets, and particularly longer-dated gilts. Today we have a yield on the 30-year gilt back to 3.67%. That is from 3.78 prior to that announcement. So there you can see calmness is back. Now what that doesn't allow you to see is the volatility between the 23rd and where we are today, where that yield moved out to 5% with the various different problems that caused. Similarly, we can see that in the currency. Sterling, as you can see in the ticker, has continued to strengthen, and indeed yesterday it strengthened a further 1.3% relative to the dollar, taking us back to that level of 115, 116. Only a number of weeks ago we were at 103, so volatility there, but actually we've moved back to the levels that we were prior to the fiscal announcement on the 23rd of September. So those are positives. I think there's another couple of positives that we have to take from that. One, from the outlook perspective, because of that calmness that we've discussed in the sovereign bond market, it will allow the OBR, the Office for Budget Responsibility, to do further analysis, but more importantly, to incorporate a lower interest rate into government borrowing projections, lowering that fiscal hole that needs to be filled. I think secondly, and most importantly for all of us, is the impact that we've seen on interest rate expectations. It was only a matter of 2-3 weeks ago where we were thinking UK interest rates were likely to peak closer to 6%. Looking at market pricing this morning, we're now at 5%, so a significant change there, and that will feed through into the costs that we all see in terms of mortgage rates in the fullness of time as well. So there is a change as a result of the more fiscal prudence that the government is putting forward. And this also links into company results in a way as well, because we have seen over the past couple of days, and indeed this morning as well, very strong company results from banks and also from a number of energy companies. And that really raises the prospect, I think, that the government might want to think about how they tax and how they tax the income that both oil and gas companies and maybe the banks are earning at this point in time. Again, that could be a positive, helping to fill some of that fiscal gap that is there. I think the other thing that is observable in results so far has been the strength of revenue that has been coming through for a number of companies, but not translating into earnings growth. And that's particularly relevant for those companies that Raj discussed yesterday, but also in terms of what we heard from Meta or Facebook last night. Yes, revenue growth, but not translating into earnings growth and seeing a negative share price reaction as a result. The other thing, just as we look to the day ahead, that we're certainly focused on as an investment team, is what we're going to hear from the European Central Bank. Expectation that we will see 0.75 increase in interest rates from the ECB, taking us up to 1.5%. Like the UK, many economies globally, the ECB faces the challenge of inflation. Inflation in the Eurozone closer to 10% as we sit this morning. We'll come back and discuss some of those aspects again tomorrow. Please do join us then.
Subscribing to the True Potential YouTube channel is quick and easy. Simply go to the channel on your desktop or through the YouTube app on your phone and click the subscribe button. You can then press the notification bell symbol if you wish to be notified as and when new videos are released. Doing this is a great way to keep yourself updated with market developments and personal finance insights. Thank you to everyone who has subscribed, and we look forward to continuing to help you do more with your money.